higher, on track for a record. S&P right now up 6 points, a gain of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, Charlie, thanks so much. Really do appreciate it. Well, you may have missed this past month, Carol, but luxury home prices in select Asian cities are soaring, bucking a downward trend in more established markets, including here in New York and across the pond. Over in London, we're talking about prime property prices. They're defined as the top 5% of the market. They fell more than 2% in New York and London in the first quarter compared to the same period a year ago. That's according to the real estate consultancy Knight Frank.
All right, so let's get a check on the luxury real estate market, residential real estate market. Louise Phillips Forbes is a real estate broker with Brown Harris Stevens here in New York City. She's been in the business for more than 30 years. She's seen different cycles. She has sold more than $5.5 billion worth of real estate, specializing in luxury residential sales and development projects. She's back with us here in our Bloomberg Interactive Broker Studio on a little bit of a busy Tuesday, and also on an interesting day where we're talking a lot about kind of the economic backdrop and the rate environment. First of all, welcome, welcome.
Thank you.
How does the market feel right now, this moment in time?
Not quite the same as it was a couple of months ago when I was here. There is...
What's different? What's changed?
I think that there is, it's not a pause, but there is, I think individuals that a month ago, they might have pulled the trigger that they're still contemplating, because I think, remember, at the end of the year, we were expecting 5 rate reductions.
Right.
And we haven't seen really any of those. In fact, we've had conversations about it coming up. So for some of those people, it means holding off. However, what's right for one person is not always right for another.
What's surprising for me to hear from you about this quarter is this is supposed to be the busy time of year. I mean, spring ahead of summer, and you had a great first quarter.
I had a record. I mean, almost 100 million in sales.
But that's supposed to be a quiet time, right?
No, not necessarily. The cycles are off because of COVID. Number
Really?
one. Number two, you have to realize that people have been holding off what decisions that they make since 2019 for many people.
So is that why people finally pulled the trigger?
Yes, and I think
quarter?
I believe psychologically I think that people believed that the interest rates were going to follow.
How many of your buyers are buying with a mortgage versus cash?
Very few right now. Okay. Ironically, of the 32 transactions, so the average deal is
from
not
the first quarter.
The average deal is not 38 million. The average deal is 3, 6, 5, 2. 600,000.
With mortgages or mostly cash?
All cash. Okay. All but 7.
All 7 of your first quarter deals?
63% across my business was a little higher, but across the market was 63 in the first quarter.
So
percent.
Why did they pull the trigger then? Is it just that they were, so for them, the rate environment wasn't so
because
much
cash is always king. It is always king, and it also, you got to remember, some of these sellers have been waiting for 9 months, 12 months.
But that's what I'm saying. So it's not like, okay, they thought maybe it had nothing to do with the rate environment or anything. They were just, they held off.
It's a negotiating tactic. My experience is that if I have 3 offers on a piece of property and one's a mortgage, and I'm able to push the cash person or even choose to take less because they're cash.
So it was seller driven.
It's them having a choice was very powerful and important and new.
Yeah.
They hadn't experienced that in a while.
Can you talk about, I think this is unique to New York because there are so many cash deals, but can you talk a little bit about why a cash deal is so much more appealing to you than a deal with financing that could come in at a higher price?
Have you not seen the reality shows where they're like, it's a cash deal, it's even lower, but
and you're closing next Tuesday.
And they're closing next Tuesday, done. Like, it's fascinating.
Yes, yes, and you have like 11-inch heels on while you're doing it.
I know. They look perfect, I know. It's like a little unreal, but anyway.
I haven't seen any of these. I haven't seen any of these shows. I don't know what you're talking about. Okay.
Okay. So no, listen. The preference becomes about cleanliness, meaning, you go to contract and then you don't have an appraisal. Like, how would you feel if you had 5 bids on a piece of property? Which, by the way, this happened all through the new year for myself.
Right.
And then it doesn't appraise. You have no contingency, but how do you feel as a buyer? How does a seller feel? Does somebody walk? So it's just cleaner. if you have the luxury of that choice. Otherwise, it's our job to be able to make things appraise.
How do you then, in your world, where you're dealing, obviously, where some people who are listening are being like, I'm going to throw up because it's like $5-6 million all cash. Like, it's not a slice of total American life. It is a slice,
right.
A small slice. Having said that, what does it tell you about the broader economic environment in a world where we, Louise, have so many conflicting data points?
Yes, and I don't think that's going to change for a while, Carol.
Okay.
I mean, listen, just remember that when interest rates are high, the rental market is high.
That's true.
Have somebody relocating here who got into the New York Academy of Arts, and they are relocating here, and we were looking for $9,000 rental, 2-bedroom. The same apartment 2 years ago went for $5,800, and it came on for $7,900, and it went for $83 in 2 days.
That's wild.
So
You're talking a rental
that
there.
is a 47% increase in 2 years because the cost of money is cheaper. I mean, the cost of money is more expensive.
Yeah.
And that
So buying is
when
tougher.
interest rates are up,
Yeah.
buyers they get on the sidelines and they rent, and they are affected. So
you're saying that people who are not buying are driving up the rental market?
yes,
But you're also saying
absolutely.
it's a tougher environment and says something more broadly macro, right?
I'm talking about for the lower end of the market.
Yeah.
Right? So I have somebody who's contemplating selling a townhouse for $6.5 million, and they're like, the cost of my capital, I can rent something for $15,000. When he goes to look at what you can pay for $15,000, he's like, I'm going to wait a year.
Huh.
So
Wait to sell.
Yes.
Okay.
Because
Interesting.
It's sometimes some of this is a luxury.
Yeah.
It is a luxury. And again, I ask the same question whether it's a $20 million buyer or a $600,000 buyer. Do you want to pay your own mortgage, or do you want to pay somebody else's mortgage? Because that's what it is, whether you're in a rental building.
right.
And so it's the whole thing around waiting for the election. Like, okay, but whoever ends up being our president is going to be our president, and you are still going to need a place to live. So I do think that you can try to time everything, but it's really about understanding I have people that are borrowing money from their grandmother who is going to inherit, 92 years old, and he's like, I'd love to be able to use it while you're alive. And that is what they did. And so people are getting creative, and it is what my recommendation is whether you're borrowing from your sister, you're co-owning with your parents. I'm thinking about, I have a son that's going to be 21 years old who's looking at real estate every day. Like, I want to buy my own apartment. He wants to buy an apartment where he can have a roommate. He doesn't think he can afford to live by himself.
Yeah. I get one last question. Does what goes on in office, does it matter? Does it impact you at all in terms of certain neighborhoods, or not really?
It certainly skews people's, they're more cynics that are in that field. I mean, a lot of my business are commercial brokers that I do business with, meaning helping them personally with their homes.
Yeah.
And, they're
feeling squeezed.
They're like, oh my God, how are you holding up, Weez? And I'm like, okay, I don't even want to tell them. So,
because they are feeling so squeezed.
Yes. I mean, the New York Times, there's a building in Times Square that just had a short sale, like, I don't know, was it 62%?
Yeah, it's pretty, yeah.
So, but this is the way that commercial market works, and the way lending works, and the way that they use the leverage. That is the science of that business. And that is always going to find cycles. It's going to have cycles, whether it's 15 years or 7 years or 4 years.
Right.
I just want to mention, you're talking about Empire Capital Holdings and Namdar Realty Group agreeing to purchase that property at 321 West 44th Street for less than $50 million.
But they bought it.
Yeah, it was a New York City office building owned by a related company affiliate. It's set to be sold at a steep discount, 67%.
We're going to say goodbye. 20 seconds, or 10 seconds, the word to describe the environment right now for you.
The environment is, when it's the most scariest, is usually when the best opportunities are.
But it's not scary now.
Unless it gets scariest.
It's not scary.
Unless it gets
clear, that
scarier.
was more than one word.
I was going to say, come on.
It doesn't feel scary. I mean, regional banks aren't collapsing. We're not in the throes of COVID.
I'm always bullish for NYC.
I love it. I love it. And you've seen a lot, no doubt about it. Louise, thank you so much.
Thanks, guys.
Fun to have you. Louise Phillips Forbes, real estate broker at Brown Harris Stevens.
Let's get a check on the latest world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Some positive signs coming out of the Mideast. Hamas says it has given Qatari and Egyptian mediators its reply to the U.S.-backed proposal for a ceasefire in Gaza. And they have included some remarks on the deal. Hamas and the smaller Islamic Jihad militant group say they are ready to, quote, deal positively to arrive at an agreement, and say their priority is to bring, quote, a complete stop to the war. Israeli Prime Minister Benjamin Netanyahu earlier reaffirmed his commitment to the proposed ceasefire plan. The foreign ministers of Qatar and Egypt are examining the response. Special counsel David Weiss says no one in this country is above the law. He made that statement after Hunter Biden was found guilty today on all counts in his federal firearms trial.
This case was about the illegal choices defendant made while in the throes of addiction, his choice to lie on a government form when he bought a gun, and the choice to then possess that gun.
The president's son was charged for illegally buying and possessing a gun while being addicted to drugs in 2018. This is one of the jurors who decided the case. She believes it never should have been brought.
This was a waste of taxpayers' dollars. I think they could have just fined him.
Hard to hear that, but the juror says they should have just fined him. This is the first time the child of a sitting president has stood trial. President Biden says he will respect the judicial process as his son considers an appeal. Voters in North Dakota today are deciding whether that state should implement an age limit for congressional office holders. The Congressional Age Limits Initiative would prevent anyone from being elected or appointed to serve in Congress if they turned 81 before the end of their would-be term. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
3:40 on Wall Street. We do check markets all day long at Bloomberg. We are looking at records right now for the S&P 500 index and the NASDAQ Composite Index. Banks lower. Dow Jones Industrial Average in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are mixed after a weak start with the Dow currently down 152 points. S&Ps are higher by 7 and NASDAQ, that rises 0.7%. The U.S. 10-year yield falls to 4.4% after the auction. Gold is higher by 3. Oil is little change, but Bitcoin, that's down by 3.5%. Among the main 11 S&P sectors, leaders were tech and telecom. Financials and utilities were under pressure. And leaders to the upside in the Dow, Apple and Microsoft, while American Express fell 3% and led to the downside. In the tech space, Apple gained as much as 6.7%, broke out of range to an all-time high. And in the chip space, the U.S. is weighing more limits on China's access to chips needed for AI. Wrapping things up, Oracle reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, to hear live breaking news over your Bloomberg-type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, guys, got about 18 minutes to go until the closing bell on Wall Street. Having said that, one other stock we want to bring to your attention, Tim, we're watching shares of Paramount. They're down about 8% here in the trade.
Yeah, this after Sherry Redstone's National Amusements decides to stop talks with Skydance. This according to a report in the Wall Street Journal. Those shares quickly dropping down 7.5% right now. The Journal reporting that NAI has decided to stop discussions with Skydance. And that is causing a sell-off in the stock.
Yeah, and here's why, right? Those previous reports. Listen, we have been following this story now for, I feel like, months. It's been a long time, or maybe...
So long, Carol.
So long. I do wonder by the time we get to December whether or not there'll be some kind of resolution. But National Amusements, you might remember, that is the company that controls Paramount. They had been in advanced negotiations to sell a majority stake in the company to Skydance, according to previous reports. But again, the Wall Street Journal saying that National Amusements has decided to stop discussions with Skydance. So right now the stock down almost 10%, shares of Paramount. So keeping an eye on that.
There were other suitors out there.
I know, but it's
for parts of the business.
Yeah, several people, right?
Yeah.
So anyway, stay tuned, as they like to say. We do want to get to, though, our Drive to the Close guest. Delighted to have back with us Larry Pitkowski. He's managing partner and portfolio manager at Goodhaven Capital Management. Larry, joining us from Millburn, New Jersey. How are you? The trade, less than 24 hours away from the Fed decision and an inflation print. I don't know. What's top of mind for you in terms of the investment environment, Larry?
Well, Carol, nice to be here. Tim, nice to be here. I'm sorry to disappoint you that what the Fed's going to do tomorrow is actually not top of mind. I think in whatever area you're investing in, if you want to try and generate outsized returns, you have to try and find things where you can have a non-consensus opinion about what's going to happen, whether it's a company, a sector, an industry, a commodity, or whatever, and then, of course, be right. And at Goodhaven, we don't think we can develop a non-consensus view about what the Fed is going to do tomorrow. So we're really just not focused on it. We'll just assume whatever the consensus is.
You sound like, is this one of those things, Larry, like, it's like, I can't do anything about it. The Fed's going to do what the Fed's going to do, right? And then we just got to kind of follow along.
It's like what my mom always says, like, worry about things you can control. Don't worry about Jay Powell. She didn't really say that.
I've got a husband at home like this, too.
Worry about things you can control.
And your mother has obviously, had the right idea.
Yeah.
But we do try and find individual securities every so often where we think we can develop a non-consensus view, and then we just got to be right, and it's worked out, pretty well lately. But we don't think we can have an opinion on everything going on out there, and nor do we think most people can.
All right. So what does drive your investment decisions right now? And what does that lead you to in terms of either particular areas or names right now?
Well, here's how we think about the overall environment out there. It's kind of 4 environments are normally taking place, 1 of 4. Okay, the first 3 are rare. Things can be very euphoric, in which point you should be a little bit fearful. Things can be, a lot of negativity. You should be a bit more aggressive. There can be existential periods of true worry, like, COVID, great financial crisis. But most of the time, the economy is a little warmer, it's a little colder, interest rates are within some kind of a range, and you should just keep turning over rocks looking for a handful of things that you think you can understand a bit better than everybody else and where you can buy them with a margin of safety. So that's how we think we are in environment number 4. And by the way, we think we're in environment number 4 most of the time.
Okay, so let's get to some of the stock picks, some of these rocks that you believe you have uncovered, where there are opportunities. We love it when you come on and bring us stocks to talk about. Ticker VTS, Vitesse Energy.
It's an E&P company, right?
Yeah, what's going on?
Well, it actually is not an E&P company. Carol, companies often have these 60-page PowerPoints where they explain what they do, and they're filled with words that you got to keep reaching for a dictionary and saying, what the heck does that mean? Vitesse has I think it's 24 words that explains what they do. And it goes like, Vitesse is focused on returning capital to its shareholders by owning financial interests as a non-operator in oil and gas wells drilled by the leading U.S. operators. That's it. They are a capital provider to the bigger E&P companies who want a partner to share in some of the costs and, of course, the returns from oil and gas wells.
It's like a rich uncle, right, for the E&P industry?
Well,
or aunt? No,
a rich, very smart uncle.
Yeah.
And the history of Vitesse, at Goodhaven, we are always keeping an eye out for spin-offs, because spin-offs from larger companies are often an area where there may be some mispricings or where they may get left behind, or for whatever reasons, often have to do with market dynamics. People receive shares in the spin-off, they don't know what to do with them. Vitesse was part of Jefferies for a long time, and we had the good fortune to watch the management team, Bob Garrity and Brian Cree, operate very successfully. It was spun off in early 2023. It's a modest-sized company, less than $1 billion market cap, and it's got a very talented management team that has, as I like to say, dirt under their fingernails. They know every rock in the Bakken, which is where they are focused on. So we have a stock price that we think is about 11 times forward free cash flow, 8.5% dividend yield, a small company, and with all of the mergers taking place in the E&P space, we think that bodes well for some crumbs left by the big guys, which will turn out to be potentially very valuable crumbs, and then some for Vitesse.
Really interesting, and I appreciate you walking through the story, because I feel like fundamentally that's kind of the stuff we care about. 20 seconds left here. We've been talking a lot about Apple this week. Anything in the tech area that you're finding interesting? And just real quickly.
We have a long-term holding in Alphabet, which we remain very comfortable with. It appears to be reasonably priced, and we think that it's a long way from figuring out exactly who wins in AI, but they have the resources, the people, and whatnot, and we think we're very comfortable there. We have an indirect holding in Apple through a long time, our large position in Berkshire Hathaway. And we will continue to look, we think, trying to understand exactly how it all plays out. It's early days, but we're comfortable with the exposures we've got, and we don't think we have to have an answer to every aspect of it.
That's very fair. All right, Larry, got to run. Thank you so much. Larry Pitkowski, he is Managing Partner, Portfolio Manager over at Goodhaven Capital Management, joining us on this Tuesday.
Hey, I'm keeping an eye on shares of Paramount Global because they are falling as we do get to the close of trading right now. Shares down 10.3%. This after the Wall Street Journal reported that National Amusements ends discussions with Skydance.
Yeah, and Redstone likely to pursue the sale of just National Amusement. So we're getting some fine-tuning of a story that has been dragging on for a while, different suitors, different parties of interest, and maybe Sherry Redstone kind of thinking a little bit differently about how she wants to essentially unload at least some of the assets. We're keeping a track. As Tim mentioned, Paramount shares down more than 9%. Coming up, folks, we're going to head over to our TV colleagues, talk about the close. This is Bloomberg.
company news headlines on Bloomberg Radio.
It's 3:53 on Wall Street. We do check markets all day long here at Bloomberg, updating you on Paramount Global. Stock now trading lower. We've got Paramount down by 8.7% after the Wall Street Journal reported that Shari Redstone's NAI, National Amusement, has decided to stop talks with Skydance. Again, Paramount Global down by 8.6%. Coming up after the close of trading, we'll be hearing from Oracle. It'll report fiscal fourth quarter results, with investors expecting that growth in sales from its cloud infrastructure unit will remain high, despite dull results from software peers in recent weeks. Ahead of earnings, we've got Oracle trading lower now by just about 0.6%. Apple shares climbed to their first intraday record today since December, as investor sentiment around the iPhone maker continues to improve. Bloomberg's Jackie Davalos was attending Apple's Worldwide Developers Conference. She thinks investors are excited about a number of topics, including
new revamped Siri. This was what I think caught people's eye. We've all kind of felt a bit disappointed by the digital assistant for years. It hardly understands you. But Apple is really emphasizing that this new intelligent version of Siri can better understand what's going on in your screen. You can give it voice commands. It can understand more conversational language. And this in turn allows it to actually take actions in the apps on your behalf.
And again, Jackie Davalos speaking with Bloomberg. Stock is trading at a record. Apple now higher by 6.9%. Apple right now, 206.61. Coming up after the close of trading again, we will be hearing from Oracle. I'm Charlie Pelleton. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
All right, everybody, we're getting ready to head over to our TV colleagues in just a moment. Count you down to the close on this Tuesday. And, it's kind of an interesting day where I feel like we get some company-specific stories. We just talked a little bit about Paramount, but we're, of course, awaiting that Fed decision, which, we've had some...
You better keep waiting, is all I'm going to say.
Well, I'm looking at my notes here. And who was it that said it was going to be a cliffhanger?
Oh, Steve Matthews.
Steve Matthews.
Yeah.
Who follows the Fed
for us. Program at 2 o'clock.
What we get...
Steve's a sports fan. Like, he spends every weekend watching college football. He tweets about it. So he looks for the excitement. And he even said that previous Fed meetings that we've gotten this year have been boring. I can't believe Steve Matthews said that.
It was like boring.
He's like, tomorrow's a real cliffhanger.
Well, and it's interesting, and it's complicated by the the actuality that we have a CPI print in the morning. So we get another inflation print. It may not be the Fed's preferred inflation print, but it's an inflation print. If it comes in hot, it's just a reminder to everybody that these inflationary pressures continue. It's just really sticky, and we're not at that 2% target.
As our eco team reminds us all the time, too, CPI feeds into PCE. So
yeah, and Michael McKenzie said this whole idea, who follows the rates market for us here at Bloomberg, this interesting kind of day where you could have the CPI print say one thing, the Fed's dot plot might kind of suggest something else, maybe in terms of the inflationary picture and what we get in terms of rate moves, and the Fed commentary and the press conference. Is Jay dovish? Is he more hawkish? What does he say about the labor market, where again you're seeing conflicting signals? We hear a lot of people talk about softness in the U.S. economy starting to happen. We'll see what Jay Powell.
I'm sure he's going to address the elephant in the room, which is the election. He's going to repeat what he said last time about politics.
So you did their elephants like Republicans.
Oh, I didn't even do that on purpose.
Where's the donkeys?
Even the 800
elephants and donkeys.
The 800-pound gorilla
in the living room.
How's that? The 800-pound gorilla.
Listen, the elections, and if you look at globally politics, how it continues to kind of upend investors. We certainly see that following the European parliamentary elections.
Yeah.
Do we have to do something?
We have. Yeah, we're going to do a little bit of a closing bell in just a minute with our friends at Bloomberg TV.
Do not go anywhere, folks. We are heading over to our TV colleagues. Count you down to the close on this Tuesday. This on a day where we've seen equity markets. We're pretty much at our best levels, but we're going to get into it right now. Over to our TV colleagues. The closing bell. It starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele. We're here to help take us through the closing bell. It's a global simulcast, or something of that nature. We're joined right now by Scarlett Fu in the TV studio, Carol Masser and Tim Stenivek bringing it up in the radio booth as we welcome our audiences across all of our platforms here. A pretty interesting day ahead of what could potentially be a much more consequential day tomorrow, Carol.
Yeah, and I think that, the Fed is going to be dealing with a lot of conflicting signals. If you look at some of the data points, just the labor market, we have conflicting signals. Having said that, I'm just trying to make sense of what's going on in banks today, because the KBW Bank Index is down a lot. It's down, as I pull it up, about 2% here in the trade, and you've got almost every name showing some declines. And I'm not quite sure, just talking with our Bill Maloney, trying to make some sense of exactly why we're seeing some pressure in the banking sector.
I guess you could say they're down ahead of tomorrow's Fed meeting.
But why?
We don't know. I don't know, Alex, if you're seeing any reason why they're lower, but certainly the worst performing sector in the S&P 500 today, JP Morgan, we see Bank of America, Citi, PNC, all lower on the day today.
Yeah, Capital One losing more than 4%, State Street also losing 4%. There used to be something called a Fed drift, where stocks would rise during the week of FOMC meetings. This is according to Nick Colas of DataTrek, and there was actually a white paper published on this. That happened pretty reliably from 1994 to 2011, but in the past 1.5 1.5 years, the drift has largely disappeared. And, you know, you're not seeing much of a rally in the Tuesday to through Thursday period. You only get a gain 45% of the time. So, you know, there's no more lift due to the Fed.
And definitely not in banks. So, Tim, you were asking sort of why? Well, I don't know. I mean, yields are lower. Huntington didn't do well yesterday, lowering its guidance for the year. We're continuing to be worried about central commercial real estate. You take a pick.
All right, we get the closing bells here in New York. The Dow Jones Industrial Average never really gaining any traction on the day, lower by more than 100 points or about 0.3%. The S&P and the NASDAQ both in the green. You can thank Apple largely for that, particularly for the S&P 500. A 15-point gain on the day, and all of that right now attributable to Apple. 0.3% higher for the S&P, 0.9% higher on the NASDAQ Composite, 0.7% higher on the NASDAQ 100. And your laggard on the day, that is the Russell 2000, lower by roughly 0.4%.
All right, quick check on the S&P 500 to follow off of those closing numbers from Romaine. And you're looking at most names in the S&P, 322 to the downside in the Tuesday trade. Scarlett, you got about 179 gaining ground and 2 unchanged.
And if you look at the sector performances, we only have 2 gainers right now. Tech, and that is largely on the back of Apple. Communication services, Meta, Netflix gaining a little bit here, but REITs have turned negative. And all the other sectors are in the red. Financials, utilities, and industrials lead the way down.
Yeah, a lot of red there. That was not the case, though, for Apple, which didn't do so well yesterday following its big event out there on the West Coast, which, of course, continues throughout the week. But it feels like all of a sudden investors are like, oh, yeah, get it. AI, Apple Intelligence, we get it all. And so we did see this stock pretty much hold on to all of the day's gains. It's finishing with about a 7.3% gain. It was the #1 gainer in the S&P 500 and the NASDAQ 100 today. Apple shares hitting a record. So, again, AI for the rest of us. Apparently, investors liked it, and they were piling into that name. We talked about banks being under pressure, but Affirm Holdings actually having a very bullish day, finishing near its highs of the session, up about 11%. You know, at the buy now, pay later company, rising on heavier than normal value. The company said Apple announced that Affirm's payment products are expected to be available to Apple Pay users in the United States later this year. So you had investors moving into that one. And here, something a little bit different. Calivo Growers, CVGW is the ticker, was up 22% at its highs. It's a small market cap, about $474 million, finishing the day with about an 8% gain. It distributes avocados and other produce, posted second quarter profit and sales that topped analysts. I should point out that about 6% of the float is shorted. Stock is still down about 9% year to date, but I don't know. I just thought it was kind of interesting, something different.
I think it's because of all the avocados we're eating in the Stenevec household.
I just want to point out, too, just before you move on,
Sure.
we are awaiting earnings today out of Oracle. We're getting some insight here into their next move here. The headline crossing the Bloomberg terminal right now, Tim, is that Oracle and Google Cloud reporting a multi-cloud partnership. I don't know what that means, but investors seem to like it.
Well, there we go. Actually, OpenAI is selecting Oracle Cloud Infrastructure. That's going to be that partnership. So OpenAI selects Oracle Cloud to extend the Microsoft Azure platform. Interesting stuff as we wait for those earnings.
Especially given yesterday's news about Apple and the OpenAI partnership, it seems like a real winner in all of these new partnerships is the one common denominator, OpenAI and Sam Altman. So certainly we'll keep an eye on that. Oracle shares are rising 4% post-market after this announcement. Hey, I do want to get to some decliners before we do get more earnings that we await. Tesla finishing the day down by 1.8%. JP Morgan analysts led by Ryan Brinkman came out with a report that said that even though Tesla real revenue generation is unlikely for years to come. Also, shares of JP Morgan Chase falling today. Financials, the worst performer. We've been talking about this throughout the program. Banks in the S&P 500 down more than 2%. JP Morgan, Bank of America, Citi, PNC. This ahead of tomorrow's Fed meeting. Shares of JP Morgan down 2.5%. And Paramount Global shares falling late in the session, just plummeting after the Wall Street Journal reported that Sherry Redstone's National Amusements has decided to stop talks with Skydance. We saw shares fall double digits just in the minutes leading up to the close after the Wall Street Journal reported this, finishing the day down, though, by about 7.9%.
You know, I think, Alex, I'm just going to make a bid here. Why not, right?
Yeah, everybody
I don't
else
think she's
is,
gonna
right?
like your bid, man.
I don't,
mean,
but
What-
what's
I
the
I don't think
worst?
she likes any bid.
a lot of
worst that could
billions. Come
happen?
on.
What do you? I mean, what are the assets you're interested in,
Oh,
Romain?
you don't want to see my assets, man.
No. What you're interested in, not what you have.
Think it-
Hey, look into the bond market for a second.
MTV,
Alex, you're
VH1,
pivoting
Comedy
from that?
Central.
I'm pivoting before we get to Oracle
Okay.
because I feel like we're into the Fed, we're into CPI. I have a countdown clock. I have 16 and a half hours until we get that CPI. You had strong buying pretty much across the curve. You have yields lower. It was there in the morning, and the bid came in even more so at 1 o'clock after you got a 10-year auction. That went really well, as Jay Perry was just telling us. That's unusual into a CPI Fed meeting.
All right, everybody. As we said, we've been watching Oracle shares and, again, continuing to see this one moving higher in the aftermarket, still up about 3.5%. We talked a little bit about this company talking about selecting Oracle Cloud, OpenAI selecting Oracle Cloud to extend its partnership. And now we have Oracle earnings coming out. So Oracle just breaking as we are talking.
All right, let's take a look at the numbers here. Fourth quarter adjusted revenue, $14.3 billion. That is lighter than what analysts had been looking for. They had anticipated revenue of $14.57 billion. In terms of adjusted operating income, $6.67 billion by that metric, slightly better than what had been anticipated. You distill that into the EPS, adjusted EPS of $1.63, trailing the consensus estimate of $1.65. The operating margin for the fourth quarter, 47%. Analysts were looking for 45.5%. So that gain that we saw on the headline about Oracle and Google Cloud partnership, that has now faded, and the stock is down about 1.5% right now.
And looking at some of the segment growth, or rather lack thereof here, a drop in the services revenue down 6%, a drop in hardware revenue down 1% here. And then even when you look at the cloud license and that on-premises license revenue, that was down 15%. Now, I guess the good news is their biggest business, which of course cloud services, that was up 9.2% here. But kind of interesting to see that as they try to transition more to cloud services here, they still are getting some drag here from those legacy businesses.
Safra Catz coming out, the company's CEO, and saying that in the third and fourth quarters, the company signed the largest sales contracts in the history of the company, driven by enormous demand for training AI large language models in Oracle Cloud. And then Oracle Chairman and CTO Larry Ellison saying that they've agreed to work together to support OpenAI and ChatGPT, and 11 of the 23 OCI data centers we're building inside Azure went live in the quarter, talking about the multi-cloud cooperation with Microsoft that expanded significantly in the fourth quarter of the year.
Yeah, just to go back to some of the breakdown there, the fourth quarter cloud infrastructure revenue, that was sort of the one everyone was watching, came in at $2 billion. That is a little better than estimated, up 42% in dollar and constant currency. But the question is, is there a demand issue or is there a supply issue, and how is the company managing that? And as Romain mentioned, sort of the old legacy businesses potentially not living up on that. Also, just to point out, cloud application came in about $3.3 billion, and the overall cloud revenue was at $5.3 billion.
All right, stock's still up about 5% there in the aftermarket, and this the stock is up about 70.5% here in 2024, so building certainly on the year gains. All right, that's a wrap, guys. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. The closing bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, we are definitely keeping a watch, though, on Oracle shares. As we mentioned, they are definitely higher in the aftermarket, so we'll be looking for some of the commentary and clarity around cloud, around the impact of AI, and when it comes to certainly software. But right now, investors certainly pushing this one up in the aftermarket, up about 4%, or just shy of, now it's about 4.5% here, but it's bouncing around a little bit.
Yeah, certainly is. I do want to talk about Apple, though, because Apple shares finished the day at a record after it took the wraps off long-awaited new AI features, betting that a personalized and understated approach to tech will win over customers. The highlight of the presentation at WWDC yesterday was Apple Intelligence. The technology will help summarize text, create original images, and retrieve the most relevant data when users need it. The push also includes a revamped version of Siri, the company's once pioneering digital assistant.
All right, we're all in on technology. So right now we want to go to, we're bringing in Anurag Rana, our Bloomberg Intelligence Senior Technology Analyst, who is on Zoom from Chicago. And so we got a lot going on here right now, Anurag. I do want to ask you about Oracle, because it is up more than 5% in the aftermarket. What stands out for you?
Oh, it's the deals with Google and OpenAI that's really making a noise here because, if you look at the total size of the cloud infrastructure market, Oracle's a distance number 4. And with the help of these two companies, I think it can expand the size of that business and overall the addressable market for Oracle, far better than what it has done so far.
What do you make of this partnership that they announced just moments before they announced the earnings? OpenAI being the OpenAI partnership with Oracle. I mean, it seems like OpenAI is the belle of the ball right now after yesterday's Apple news.
Yeah, I mean, there was a rumor a few days ago also that OpenAI will be using them as a backup or as a second cloud provider. But to be honest, it's the Google partnership that really caught me by surprise because historically these two have been completely opposite. They have had fights in the past, and Google's cloud CEO, he came from Oracle. So there's a lot of history between these two companies. And I think this is the first time they are really making this big announcement. So I personally think this is a bigger deal than the OpenAI case.
Interesting. Oh, what were you going to say?
No, go ahead. Yeah.
Well, all right. So, I mean, we're kind of going back and forth. I just want to point out we're still watching shares of Google. I mean, shares of Oracle. Forgive me, up about 7% here in the aftermarket. So we're seeing some strong reaction post their earnings. Back to Apple, though. Fundamentally, how does any of what we got yesterday, Anurag, change the fundamental Apple story?
I think you could say that over the last 2 years, there hasn't been any good news coming out of Apple, frankly. I think everything has been, I would say negative. At this point, what we can say is, even though they have been behind in the AI race, they showcased a few things today that once fully embraced, it can help jumpstart you could say the iPhone cycle that has really been bad for them over the last 2.5, 3 years. I think it has the capacity to change that over the next few years. It's not going to be rapid. It's not going to be a massive adoption in the near term. But I think you can see how this is going to change the way consumers who've been holding on for their phones longer give them a chance to upgrade it.
Well, there's some debate around that because on the one hand, you have folks who, we spoke to yesterday, Gil Luria over at D.A. Davidson, who was basically like, yeah, if we see, a AI that only works on iPhone 15 Pros and above, then yeah, that could spur people to upgrade. But then Mark Gurman comes out and says, I don't know if it's yet enough to cause people to cause Apple to have a super cycle upgrade here. Where do you fall in this, Anurag?
Yeah, I'm not going to use the word super cycle at all. There's going to be some cycle though, because remember, they have been stagnant. They have been stagnant for the last 3 years. To be honest with you, even a 5% increase in unit shipments is going to be really welcomed at this point because we have seen flat shipments for the last 2 years. So, that's the big problem. You have a big base of phones, let's say close to over 800 million phones that get refreshed over 3.5 to 4 years. It has been flat. I mean, there has not been any improvement. So even a 5% improvement means, let's say, roughly a revenue increase of 7 to 8% for iPhone, which has not been the case so far. So I agree. It's not going to be a super cycle, but it's going to be a mini cycle.
All right, we're going to leave it there. Hey, Anurag, thank you so much. So glad we could check in with you because this has certainly been something that we've been talking about a lot here, certainly on the Bloomberg and in the newsroom. Anurag Rana, he's Senior Technology Analyst at Bloomberg Intelligence, joining us from Chicago.
Okay, Apple, a top stock in business story today. Tomorrow, as you know, it's all about the Fed and its impact on markets and mood and transactions, which brings us to Jim Gold, CEO over at Steward Partners. It's a financial services firm. They've got about $35 billion in assets under management. Jim's here in the Bloomberg Interactive Brokers studio, waiting patiently while we go through everything that happens at the close.
It's been one of those days.
It has been one of those days.
Just when we think we have our course, like something gets thrown at us.
Hey, as I was preparing for this, I went back and saw a note from Barclays last month that said M&A volume has risen 17% so far this year. The investment bank's model projects 15 to 20% growth over the next 12 months to $1.8 trillion. They also reminded us that activity in 2023 was the slowest in a decade. Remind us of how you play in the M&A space over at Steward Partners and where you see the market going this year.
I think the M&A space is accelerating, and I think the figures we see publicly are, I think, actually woefully underreported because you think about the smaller end of the scale where advisor A sells to advisor B, and there's not a banker involved. No one reports on that transaction. So I would say there's probably hundreds more transactions that are out there. I think another trend is we look at as breakaway M&A. So an advisor from a big four wirehouse firm leaving to go somewhere, the assumption is they're getting recruited, but in actuality, more of them are actually selling the business today. So the M&A.
So that's M&A?
Absolutely, because they're selling the business, yeah.
Well, that's what I was thinking about. You guys are really involved, right, in ownership, the private equity or like company ownership of deals, and that's where you kind of play in that space?
So we offer optionality. So we have the ability for advisors to affiliate with us, and they own their clients, and they just want to work with the Steward organization.
Yeah.
And then we also offer people the opportunity to say, hey, I'm 5 or 6 years from retirement. I want to sell you guys the business. Help me figure out my
liquidity
succession plan.
Event, right?
Right.
Yeah. No, continue. Yeah, please.
Yeah, there's a succession crisis going on in wealth management. I think it's driven by the boomers actually are working longer than expected because they're healthier and markets are good. They make a good living. And now all of a sudden they're getting into their 70s and saying, wait a minute, I got to wrap this up at some point.
I know somebody like that. He, has a wealth management business with a big firm, and he's got all the clients that he's had, and he's in his 70s, and he's like, what am I going to do now?
Right.
Who's going to buy this thing? His kids don't want to get into the business.
But G2s don't have the money either.
His kids' partners don't want to get into the business.
Right.
What are his options?
Well, I think the option there he has to look at, and I think at the bigger firms, the challenge they have is that there's only one bidder. So how do you know what the real value is? You have to test the market, right? And then the terms around that.
Isn't it pretty simple, though, to know what it's worth? You have assets for that kind of business, assets under management.
It's so different. If you stay in that channel, because they're the only bidder. So there's a very suppressed valuation. And
but I mean, isn't there a way to create a valuation model based on comps? Because what are the comps for that type of business? Isn't it just like or the multiples for that type of business?
Well, you're going to see, if you look at multiples of EBITDA and the smaller end of the scale, so say sub-$1 billion asset firm, they're going to be, high single digits, approaching double digits, depending on the other criteria, things like growth and how old are the clients, is the business growing, is the business shrinking.
Meaning a firm with $1 billion in assets under management would sell for $10 million?
Yeah, or more.
Okay.
Yeah.
Interesting.
Jim, how much pressure is on private equity firms? What are you seeing to do those exits? Because they've been holding for a while, because the environment hasn't been a good one. But they eventually are going to get pressure from their investors, and they want to free up, capital. I know private credit can come in and help them maneuver through that. But how much is on private equity, and how much does that mean in terms of the M&A environment picking up a little bit?
Well, you have to have private equity, right? Because they provide the capital, they provide the fuel. And I think, listen, the better private equity firms are getting creative where they're now having funds that are 10 years shelf life. They're not the typical 5-year where they need to turn them and flip them. Look, at the end of the day, private equity is happy to be illiquid as long as they're getting illiquid rates of return. But I think the challenge they have is finding the right partner to actually execute on that. Right, they're not directly getting involved. They're funding a company like Steward. We're not owned by private equity. We have 2 family offices.
Right.
But they're the capital behind the capital. So what they really have to find is the right leadership team and the right company that has the scale and the resources to actually go out and execute on an M&A strategy.
So in terms of the deal activity that you're seeing or expecting, what does it tell you kind of about the broader macro environment? I feel like folks like you can kind of see a lot when we are seeing cross currents when it comes to some of the kind of, fundamental traditional statistics.
I think the challenge for advisors who think about succession, I think the mistake that's made is this should be a 3 to 5 year plan. Don't decide today you're going to retire at the end of this year, right? You have to think about your clients, your team, valuation, structure, who's your successor. I think the older folks, maybe the gentleman you mentioned who's in his 70s, they can't wait for another market cycle maybe. So they're starting to go, hey, the markets are pretty good here. Maybe this is the time. And maybe I can't wait 8 more years to do this or 7 more years to do this. So I think the demographics are forcing some people to make a decision now because they don't feel they have a runway to wait through another market cycle if that's where we're headed.
What percentage, though, are of the deals that maybe you're looking at or seeing are people who are pressured that have to do something? How much are more just still kind of waiting for the right environment?
I think most of the folks we're talking to are in their 60s. A lot of these are bigger teams, though, that will have G1, 2, 3.
Yeah.
So they're saying, hey, to the point you made earlier, my G2 and 3 don't have the capital to buy me out, right? I don't want to leave immediately, so this is really my 5-year plan, but this team's going to be here forever. So we love that because we love the continuity with the clients as well.
Right.
Yeah.
What do you think of the idea of the wealth management business? I'm not going to say losing relevance, but what I'm going to say is that increasingly you're seeing study after study talk about passive investing, the rise of passive, just investing in index funds. And I'm wondering if there's this new class of investors who are less interested in paying high fees for their money to be managed and more interested in just setting it and forget it.
Right. There's an old cliche. They say the fee, the fee only matters in the absence of value. So I think the need for advice is always going to be there. If you look at the studies on wealth creation, there's more wealth being created than ever. The more wealth you have, the more complex your situation is, and you need advice. I think the other trend that's really interesting, and it's good for me on the side of the space that Seward sits, which is the independent space, overwhelmingly the sub 40 advisors want to be in an independent firm. They don't want to be at their mom or dad's wealth management firm.
Right.
So that's driving a lot of this flow to our side of the space as well. So the market may shrink, but the assets are growing and the headcount is shrinking. So you actually might still have more assets and revenue per advisor with a smaller sales force.
Do you see those younger advisors, those sub 40 advisors, changing the way they're charging clients, maybe doing an hourly rate versus an assets under management rate?
We haven't seen it. We think the asset-based pricing seems to be reasonable, and they can use some of those tools. They can use index ETFs and things like that where appropriate. And listen, I think the ROAs are coming down across the space, but they've always come down.
AI, how do you think is going to, I just came back from Nashville, Pershing, BNY Mellon, doing their Inside event.
We had a whole team there.
Yeah, and it's really fascinating. One of the conversations during a keynote is that what does the future financial advisor look like? Right. What does the future investor look like and what they want? And we tapped into a lot of longevity as well as a younger, investor. So how are you thinking about that?
I think AI is going to be amazing. Actually, our CIO actually spoke at the Pershing conference. Yeah,
it's a great feel of kind of what everybody's thinking.
Yeah, listen, I think it's another. Some folks are taking this as the latest threat to advice, right?
Yeah.
And it's like, online trading and advice is going to be free. Listen, I think it's going to be amazing for both the client and the advisor. I think the COVID world changed how clients say, hey, I don't want to hear my advisors out of the office. I'll just FaceTime them or text them or Teams them or whatever I can do to get a hold of them.
Right.
So I think AI is going to create amazing tools for the clients and the advisors to interact. We're seeing some of them already, and our CIO knows what he's doing. I don't. I tend to lock myself out of the computer once a month. So, but we're excited about AI. We think it's going to be great. I was an advisor back in the 90s when the internet was a new thing, and you think about, I remember Sandy Weil once said this. He said, they asked him about...
Formerly of Citigroup.
Correct. And they asked Sandy about the internet, and he said, listen...
Sorry, there is a whole generation that's out there that doesn't. I know. I feel like such an idiot.
All you got to do is go to Weill Cornell and see whose picture is on the
I know,
wall.
but I'm feeling like I could ask a fair amount of folks.
I'm a grandfather now. I know these things.
I remember, right? You remember him creating, what is now Citigroup. But anyway, forget it.
His quote was so prolific because he said, listen, 85% of the internet-based companies today will be bankrupt in 10 years. And the 15% left, and you just talked about some of them, are going to be worth more than all of them combined.
Right.
And I think it's the same thing with
Oracle,
AI. There you
Amazon.
go. Exactly. And they were all around then. I'm old enough to remember some of their IPOs.
Really fascinating. Interesting time to be kind of in the markets.
Amazing time.
Amazing because of opportunity?
Yeah.
Really?
Always opportunity.
Always. Well, but there isn't always. Well, I guess there is. You just have to be patient.
They're always out there. You just got to look harder sometimes.
Jim, this was fun. Thank you so much for being patient. We had a lot going on, and we really appreciate it, and you being really flexible with our team. Jim Gold, Chief Executive Officer of Steward Partners, joining us right here in our Bloomberg Interactive Broker studio.
Hey, coming up in just a few minutes, we're going to check in with the author of Holding It Together, How Women Became America's Safety Net. First up, though, a check of top business stories and what ended up happening with the markets. Here's Charlie Pellet.
Thank you very much, Tim. Indeed, let's focus on Oracle after hours. Stock up big time, advancing now by 7.2%. Oracle is reporting cloud infrastructure revenue for the fourth quarter that beat the average analyst estimate. In the meantime, Oracle and Google Cloud also announcing a groundbreaking multi-cloud partnership. So what exactly is driving the stock higher after hours? Anurag Rana is a senior tech analyst with Bloomberg Intelligence, and he was interviewed moments ago right here on Bloomberg Business Week.
Oh, it's the deals with Google and OpenAI that's really making a noise here because, if you look at the total size of the cloud infrastructure market, Oracle's a distance number 4, and with the help of these two companies, I think it can expand the size of that business and overall the addressable market for Oracle, far better than what it has done so far.
Anurag Rana of Bloomberg Intelligence. Again, after hours, Oracle shares now up by 7.1%. The other story breaking after the close of trading, sources tell Bloomberg activist investor Nelson Peltz's Trian Fund Management has amassed a significant stake in the UK-based pest control company Rentokil Initial. Stocks higher. S&P at a record up 14, 53.75, up 0.3%. NASDAQ surged 151 points, also at a record today, up 0.9%. The Dow lower today, down 120 points, a drop of 0.1%. While we're talking records, Apple shares up 7.3% today. 10-year yield 4.39%. The 2-year 4.82%. Spot gold up 0.3%, 23.16 the ounce, and West Texas Intermediate crude up 0.1%, 77.82 a barrel. Again, recapping, stocks higher. S&P up 0.3%. Oracle after hours up 7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thank you so much. Do appreciate that. Well, last year, women's earnings were 83.6% of men's. This is according to the U.S. Bureau of Labor Statistics. This is not going to surprise any of you. It's not news to any of you. We know Equal Pay Day. We've been talking about this forever. It's not getting any better. What is talked about less, though, is all of the work that women do that's unpaid. Childcare, taking kids to the doctor, cooking for the family, managing the family budget, taking care of elderly family members, figuring out what the kids are doing for the summer, doing all the work for our show here on Bloomberg Business
Tim
Week.
Stanovic.
Please, go ahead, Carol.
Tim is actually a really good partner, and we share, but in a lot of ways, women are the family safety net. They are holding it together. I have to say, there's a story my sister loves to say when she was at home with 3 kids, and she and her, my brother-in-law, she and her husband were talking about like insurance, and she's like, no, you need more insurance for me because I am the limo driver, I'm the cook, I'm the cleaner. I'm like, she just kind of went through it, and it was a really funny conversation, but she was kind of laying out all the jobs she does. And she says, yeah, the insurance you need on me is a lot more than you need on you, honey.
I can see Jessica Calarco just nodding right now. She's sociologist and associate professor at the University of Wisconsin at Madison. Her new book is called Holding It Together, How Women Became America's Safety Net. She joins us from Madison, Wisconsin. Professor, how are you?
Having me on.
Yeah, thanks for joining us. It's really good to have you here. I got to tell you, we've been talking about this book for a while, and it's great to get to talk to you about it. I just want to start with some numbers here, because your book takes us through a lot of anecdotes of women who you spoke to, who you interviewed, and what they're doing. But we're Bloomberg. We love numbers. We love data. What can you tell us about just how much work women are doing for the American economy?
Sure. So essentially, women are the default caregivers for the children, for the sick, for the elderly, not only for kids, but filling in those kinds of jobs that you mentioned before. And essentially, they are doing this work. This is actually related to the numbers that you mentioned before in terms of, women's equal pay or the lack of equal pay, in part because the kind of work that women are doing behind the scenes is a big factor in where that gender gap in pay comes from. That the more labor, the more unpaid labor we heap onto women, the harder it is for them to advance in their careers, the harder it is for them to compete with men and in ways that other countries don't. And research shows that one of the strongest predictors of our, economic growth in countries is the amount of money that we invest in providing the kinds of supports that help to alleviate some of those gender gaps in both unpaid work and also the kinds of gender gaps that show up in paid work as well.
Jessica, if the pandemic hadn't happened, would you have written this book?
I don't think so. I certainly, this book started as a project I was interested in, what I thought of at the time as the sort of best laid plans of parenting, how you have ideas about the kind of parent that you want to be, and life intervenes, and life intervened in the sense of a pandemic happened in the middle of my data collection efforts, and really pushed me to want to understand that the interviews that we were doing and the surveys we were doing with families across the U.S. at the time really showed how much of an impact the pandemic was having, especially on families with children and especially on the moms within those families who were really trying to hold it together in the midst of this crisis, which led me to want to understand, how did we get to this point of relying on women to be the social safety net for us? And then in the context of the failure of Build Back Better, why didn't we learn from the mistakes of the pandemic? Why didn't we pursue those kinds of policies that might have helped to put us on better footing, both gender-wise and in terms of economic parity with other types of countries that have used those social safety nets for decades?
Okay, so the simple question with perhaps not a very simple answer, how did we get here? How did we get to the point where women became America's safety net?
So we can trace this back to, essentially, in the book, I trace this back to the 1930s and to the pushback in the wake of Franklin Roosevelt's New Deal. Essentially, at the time, the National Association of Manufacturers, a business lobbying agency, was looking for ways to resist some of the higher corporate taxes and higher taxes on wealthy people that were needed to pay for these kinds of strong social safety net programs. And what they found at the time, I talk about in the book, were a group of neoliberal economists out of Austria who were developing this theory that we don't actually need social safety nets as a country, because if we don't have protection, people will take steps, make better choices to keep themselves safe from risk. And this theory has been debunked over time in showing that that's not actually how people respond to risk, but they use this to fuel not only changes in policy in the US, but also massive propaganda campaigns, things like General Electric Theater, which helped to create this perception of kind of pulling ourselves up by our bootstraps, this very American mentality, and also reinforced traditional gender roles, which helped to lay the groundwork for the kinds of policy decisions that we made after World War II, for example, of instead of trying to take steps to allow women to stay in the workforce, to continue those Rosie the Riveter jobs that they'd had, we shuttered the child care centers that we put in place during the war, and we pushed women back home and really embraced the 1950s culture around gender, and that echoes of that still exist today in the way that we treat women as a reserve force.
I have to jump in, because here we are 70 years. My grandmother was a Rosie the Riveter. Like, here we are, and she was actually a working woman before and after the war. It was just kind of what they had to do. It was also a time when you had multi-generations in a household, and, older generations took care of the kids, and, but that was kind of my grandparents' household. Having said that, here we are, 70 years later, and we're still talking about the same old problems. Tim, we talk about childcare, the costs, the juggling. Like, why haven't, right?
I can speak from personal experience. It's just a daily struggle figuring out who's picking up what kid, who's cooking dinner.
And you guys have childcare.
We have childcare, yeah.
So I just feel like, why are we still having these difficult conversations? Why haven't we figured out a better system? Why isn't it? It's not a new thing. Is it policymakers at the federal level? Is it state level? Is it just a society so entrenched that we don't value women as much? What is it?
Essentially, other countries use social safety nets to help people manage these challenges and manage these risks. They use, taxes and regulations to not only protect people from falling into poverty, but to help people manage the challenges of daily living, things like childcare, things like healthcare, and also to ensure, with things like limits on paid work hours, to ensure that people have the time and the energy to do this work of taking care of their families, taking care of their communities, taking care of their homes even. And in the US, we instead try to DIY society. We tell people that they should be able to manage this risk on their own, but the reality is that that's not possible, and that's where women come in the sense that they're tasked with holding it together, with doing the unpaid and underpaid labor that makes it seem like this DIY illusion is possible, even when it's leaving us on the edge of collapse.
Well, it sounds like we've got to really value care, whether it's for kids, for elderly, for so much more. And maybe that's what we can dig into a little bit more. We're going to come back with Jessica in just a moment.
Jessica Calarco is with us. She's a sociologist and associate professor at the University of Wisconsin-Madison. Her new book, I got it in my hand right here, Holding It Together, How Women Became America's Safety Net. Check a look at the markets today.
Well, I just want to take a look at Oracle, because it's still up about
please.
8% here in the aftermarket. It's we just got earnings after the closing bell. It did report better than expected bookings, so that suggested some continued momentum for the company's effort to compete in cloud computing against some of the larger tech rivals. So we are watching Oracle up about 8%.
Hey, let's get a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Hunter Biden has been found guilty in his federal firearms trial. The son of President Biden was convicted on 3 counts of violating federal gun laws for illegally checking a box on a form stating he was not an active drug user at the time he bought the firearm. Former Assistant U.S. Attorney and Assistant Special Watergate Prosecutor Nick Ackerman tells Bloomberg Biden's attorney never should have allowed this case to go to trial.
They had to have known right from the get-go that there were these text messages during the period of time when he signed that form and filled in those boxes and also possessed the gun, even though it was for a short period of time. They knew that there was evidence that Hunter Biden was still addicted and was still taking crack cocaine.
Nick Ackerman speaking with Bloomberg's Balance of Power. 2 of the gun counts carry a prison term as long as 10 years. Another is punishable by as many as 5, though judges rarely impose maximum sentences. President Biden plans to travel to Delaware later today to spend time with his son. He addressed a gun control conference today, but did not address the verdict. He did release a statement, though, saying he respects the judicial process. Hamas has delivered its response on a U.S.-backed ceasefire proposal to Egypt and Qatar. One person familiar with the matter says the group wanted changes before committing to any deal. Hamas and Palestinian Islamic Jihad said their response prioritizes the interest of the Palestinian people. Additional restrictions could be coming to China over access to chip technology that's used for artificial intelligence. Sources tell Bloomberg the administration is considering measures that would limit China's ability to use a cutting-edge chip architecture known as Gate-All-Around, or GAA. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A number of after-hours developing story. Elon Musk has dropped a lawsuit against OpenAI and Sam Altman. Musk is withdrawing the lawsuit as OpenAI asks a California judge to dismiss the case. In Canada, the National Bank of Canada will be buying Canadian Western Bank. And after the close of trading, we heard from Oracle. It reported better-than-expected bookings, suggesting continued momentum for the company's effort to compete in cloud computing against its larger rivals. After hours, we've got Oracle shares advancing. Oracle after hours pushing higher by just about 6%. Turned out to be a record-setting day for the S&P 500 index, up 14, a gain of 0.3%. NASDAQ also at a record, up 151 today, up 0.9%. The Dow, though, a losing day, down 120, a decline of 0.3%. 10-year yield, 4.40%, with a 2-year today that's yielding 4.82%. Gold, higher today, gold up 0.2%, while West Texas Intermediate crude up 0.5%, $78.15 a barrel on WTI. Gold, by the way, $23.15 the ounce. Up next for Wall Street, the CPI report, and then the FOMC decision. Anna Wong is chief U.S. economist at Bloomberg Economics.
I think Powell will be dovish. I also think that the Fed will not be alarmed by the jobs report last Friday in either way, either by the rising unemployment rate or the very strong farm payroll.
Anna Wong of Bloomberg Economics. Again, after hours, Oracle up by 7%. And that is a Bloomberg Business Flash.
Thanks, Charlie. Do appreciate that. Hey, I want to get right back to Jessica Kolarko. She's a sociologist and associate professor at the University of Wisconsin at Madison. Her new book, Holding It Together, How Women Became America's Safety Net. She joins us from Madison, Wisconsin. Professor, there's a lot we want to get to in the remaining minutes we have with you. I want to start, though, by just understanding data collection and how you reported out this book. Just give us an idea of how you were able to gather these stories from so many women.
Sure. So we started by recruiting 250 pregnant women from prenatal clinics in Indiana, and this was in 2018 and 2019. And we were following those same women over time with surveys and in-depth interviews every 6 months from the time that they were pregnant through their first 2 years postpartum. And the pandemic hit in the middle of this, so we did 3 additional waves of surveys and interviews with the mothers and their partners and some of their social network contacts. And then because this was mostly an Indiana-based sample, we also did 2 national surveys, each with over 2,000 parents from across the U.S. To better understand how to kind of contextualize the findings from our qualitative data. And then I also dug into a lot of the historical research and some media case studies for the book as well to better understand, how did we get here? And then what are some of the myths that are helping the cultural myths that are helping to keep us from changing?
Let's go there, because that's where I want to go. Chapter 6, the Mars-Venus myth. I can't tell you how many times we're having conversations and it's like, well, of course, Mars, Venus, we're different. We're wired differently. So of course, women are the caregivers. It's just the way it is. Go there, because I love this.
Sure. So essentially, there's this myth that is perpetuated by many parts of our culture that suggests that men and women are just fundamentally different.
But go to the book, right? The book,
Yeah.
1992.
Exactly. So, it stems in part, certainly these ideas are much older than that, but it's echoed in this kind of John Gray's kind of classic men are from Mars, women are from Venus, which almost, suggests that men and women are from different planets, not only different species even. And it echoes of this. You can hear this in, recent conversations, things like Harrison Butker's commencement speech around this idea that women are just happier at home, that's their natural duty or their natural responsibility to be in the home. And what research shows is that belief in these kinds of mythical ideas and that they are mythical, that gender is way more complicated than this sort of simple pink-blue binary, and that socialization, early exposure, that parents and adult caregivers treat children very differently on the basis of perceived gender from very early on in their lives, and that this lays the groundwork. We expect girls to be mothers from the time that they're old enough to hold a baby doll in ways that we simply don't expect for boys.
But what's interesting is, and I just want to stop for a moment. There was an interview you did, and Tim and I both like reading this, that Mars and Venus, men and women are just fundamentally different, both psychologically, it's an explanation, right? It's also very convenient, you have said in the past. It means, though, we don't need big structural solutions. That's kind of the payoff, right? If we believe that we are fundamentally different, it's not that there's something structurally wrong. And that is maybe why we continue to have this conversation decade after decade.
Exactly. What I find in the national surveys that I've conducted with parents is that the majority of dads, for example, believe that kids are better off with their mothers at home. And what I also find is that the dads who believe in that myth, who believe that it's better for kids to have a mother at home than to have a mother who's engaged in paid work, is that those are also disproportionately the dads who reject the need for a stronger social safety net. And essentially believing this myth, believing that women are just happier at home or that it's better for kids to have mom at home, allows us to feel like, well, maybe we don't need to invest in that stronger social safety net. Maybe we don't need paid parental leave or universal affordable childcare because it just works better for everyone if mom is at home as opposed to in the paid workforce.
Where are we right now as we head into the election of 2024? Because I was actually talking with I was talking with a guest earlier on our crypto show, and she's big in it was a crypto show, so she's big into crypto, and she sent a tweet out earlier this year, Jessica, that talked about choosing between on the ballot women's bodies and the right to have autonomy over your body versus your wallet, because she doesn't believe that the Biden administration is pro-crypto enough. And it was interesting to hear that juxtaposition because, and I asked her, is it actually that black and that white for you? And she said there are a lot of people who are single issue voters when it comes to crypto. But here in 2024, I think we're at a time when a lot of people never thought that Roe v. Wade would actually be overturned. How does the conversation in your world shift in an election year like this?
Yeah, I mean, I think we have to think about the way that denying people bodily autonomy, denying reproductive rights, makes it easier to exploit women's labor. It can push them into motherhood in ways that make it difficult for them not only to have choices about things like finishing college or investing in the kinds of careers that they need to take time for, but can also leave them pushed into the kinds of low-wage jobs that offer limited options for their families that make it harder for them to get ahead. And so I think we have to think about the way that these kinds of attacks on reproductive freedom are attacks also on women's economic opportunities and on their ability to take care of themselves and their families financially as well.
You get into this idea, I don't want to end without thinking about, like, how do we fix this? You talk about a union of care. So we've got about a couple of minutes left. How do we move forward so that in 10 years from now, you and I aren't having this same conversation?
Absolutely. I think we have to, you mentioned before the break, the importance of valuing care work in the sense that we know that women do twice as much unpaid care work in the U.S. as women, and estimates suggest that that unpaid care work done by women is valued at over $600 billion a year. And so I think we can think about the value that women are adding to the economy, even if they're not themselves being compensated for it, and also recognize how that kind of care work benefits all of us, and that if we all had the kinds of policy protections in place, that we could share that unpaid care work more equitably and also ensure that we have the time and energy to do it sustainably so that we can, and I'm guilty myself of having a giant pile of clean laundry piled in my bedroom because I just don't have time to put it all away. But with better protections, we might have the time. And that's where a union of care comes in.
I'm waiting for AI to do that, to be quite honest with you. Yeah, Tim and I keep talking. AI is going to be innovative and disruptive when it can do the dishes and do the laundry.
That's what we're looking for.
Run a vacuum. Oh, I've got one of those already.
So then we can actually, I would love it, so then I could actually spend more time with my kids.
Exactly. You know? Are you hopeful? Just got about 20 seconds, 25 seconds left.
I think I'm hopeful in the sense that if we can come together and reject the kinds of myths that divide us, that we can fight together for the net that we actually need and deserve.
Right. If anything we've learned, I feel like since the pandemic, since George Floyd, stereotypes, myths, like these are things that maybe limit us in thinking differently about the policy that's really needed to solve some of the problems that are out there. Jessica, really enjoyed it. Jessica Clarko, she is sociologist, associate professor at the University of Wisconsin-Madison, Holding It Together, How Women Became America's Safety Net. It is a new book. And really
came out on June 4th, so you can buy it now.
Yeah, really good stuff, and really just kind of an important part of the narrative. Jessica, thank you again. Really appreciate it. Listen, we're watching Paramount in the aftermarket. National Amusements Supports Plan announced by the Office of CEO. Comments in an emailed statement, confirms not able to reach terms with Skydance. This is, of course, a division of Paramount. So it continues.
Shares fell today by about 9%, but not moving much in the after hours.
All right, you are listening and watching Bloomberg Business Week. Carol Master, Tim Stanovic. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Oracle shares ripping higher after hours, up now by 9%. Oracle reported better than expected bookings, suggesting continued momentum for the company's effort to compete in cloud computing against its larger tech rivals. Oracle and Google, meanwhile, also announced a groundbreaking multi-cloud partnership. Anurag Rana is following Oracle after hours. He's a senior tech analyst with Bloomberg Intelligence, and he was a guest right here on Bloomberg Business Week.
But to be honest, it's the Google partnership that really caught me by surprise because historically these two have been completely opposite. They have had fights in the past, and you know, Google's cloud CEO, he came from Oracle, so there's a lot of history between these two companies, and I think this is the first time they are really making this big announcement. So I personally think this is a bigger deal than the OpenAI case.
Bloomberg's Anurag Rana. In the meantime, sources tell Bloomberg activist investor Nelson Peltz's Trian Fund Management has amassed a significant stake in UK-based pest control company Rentokil Initial. Apple shares at a record today, 207.15, as investor sentiment around the iPhone maker continues to improve. The record came in the wake of the company's Worldwide Developers Conference, where it showcased a number of features relating to artificial intelligence and announced a partnership with ChatGPT maker OpenAI. Apple today rallied 7.3%. 3%. Some of the other stories we're following, sources tell Bloomberg the Biden administration is considering further restrictions on China's access to chip technology used for artificial intelligence. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, getting ready to wrap up the Tuesday edition of Bloomberg Business Week, which means we get ever closer to a couple of things: the CPI print, the Fed decision, and the Doug Christner.
Daybreak Asia later, yeah.
Yeah.
And speaking of inflation, later today in China, we're going to get the PPI and CPI numbers from the government. So the real concern
Do we always
here...
trust those numbers?
Sorry?
Do we trust those numbers?
Yeah, I think they're fairly reliable. The market trades off them. One of the things that you're going to be keeping a close eye on is at the wholesale level, what they call factory gate inflation.
Yeah.
It's been in deflation now for 20 months. I mean, it could be, I think, 20 months if we continue to deflate. And this is a real drag on the economy right now in China.
Which is such an important part of their economy.
Yeah,
right?
Yep. We were talking yesterday about even pricing for certain services in the economy are now lower than they were only a couple of months ago. So deflationary pressure is a big part of the China story.
Very different from kind of our story.
Yeah, well, I don't know.
Or is it? No?
We'll see tomorrow morning, right? To the extent to which we're going to see disinflation in the United States and whether or not the Fed has room to move here. Some people in Congress are calling, I think Elizabeth Warren among them, saying that the Fed should go ahead and cut interest rates.
She's been saying that for a while.
I don't know why.
Her perspective is about housing affordability and nothing else. But I think the problem with that approach, and I think economists would agree, is that if you do that and unleash demand, then you see inflation move higher.
Well, the other part of the story, too, is that so much of what happens in the mortgage market is priced off of the Treasury market. Now, if the bond market does not have confidence in the Fed, then market rates are going to push up.
Exactly.
Right? So you need to allow the Fed to try to do its job.
Well, one of the things that we love having Michael McKenzie in, who follows the rates market for us and just kind of ties it all together. But he said we could have a day, like he's talking to bond traders or rates traders, if you will, rate traders. And he's saying, get ready for some volatility. Like every print brings about volatility in the market. And you could have a day where CPI says one thing, the Fed commentary says another, or the Fed decision brings out one reaction, or the dot plot says one thing, and then what we get from Jay Powell in the press conference is another. That just kind of confuses where we are and where we go from here.
But it would be very interesting to kind of be a fly on the wall at the meeting. I mean, it started today, obviously.
You want to know what Jay has for lunch,
well,
right? Before
no,
that
but
decision?
the thing is that when you look at financial conditions, I mean, the bond market has rallied to some extent. Yields are down. The stock market is higher. The dollar is stronger. That's not necessarily what the Fed would
Those are
like
not
to see.
necessarily tightening financial conditions.
Well, I mean, especially on the equity side, I would say that it speaks of looser financial conditions. And you have to wonder about the degree of just rampant liquidity that still exists in the market.
Apple up today.
I agree with you.
7%? You don't have to agree with me.
No, but the amount of
I just wonder.
No, but the amount of liquidity that's still in the market.
There's a ton of it.
It has not
There is a
settled.
ton of it.
And that's something we need to think about.
Apple up today by 7
Hey, Tim, do you know I'm holding it
2%.
together for us?
Yeah, I know you always
How do you feel about that?
I'm living it every day. No, I shouldn't say that. I have a household where, when our daughter was born, my husband, we switched gears. And he was, he had done a lot of stuff in his career, and then I ended up getting kind of where I wanted to be. And so he stayed home and raised our daughter. So
it's really cool.
Our household has been an upside down, a different one. So it's kind of an interesting perspective. But I feel like so much of society, it's still a lot gets thrown.
Unconventional, is that a word to use? Unconventional, maybe?
I think you would say that statistically. Although I think the great financial crisis, a lot of women held on to their jobs and men did not, and so things kind of shifted a little bit.
I'll tell you. I mean, anecdotally, I never see what you're describing.
Like, what do you see when you drop off kids? When you drop off your son?
It's a mix of moms and dads.
Yeah.
I would say it's still more moms. I'd say sometimes it's caregivers, especially if there are multiple kids in the family.
Well, I think corporations have become a little bit more sympathetic to the way that home life has been restructured, and there's a little bit of slack that corporate America has created, and
especially
that's a good
with
thing.
the work from home.
Absolutely.
But just so you know,
compassion.
Tim and Doug.
What?
We women are holding it together.
All right,
that's
good to know.
I actually love this. I think this is so true.
It's a great book.
Hallelujah. I don't know. It's a wacky Tuesday. I'm ready for the Fed meeting and the Fed decision. Doug, have next. Have a good couple of hours.
Thank you.
Or is it like 20 hours that you do?
Yeah.
All right, that's going to do it for Tim and me. Have a good and safe evening. Balance of Power starts now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power.